What's happening, traders? Welcome back to another video. Today we're going to be going through my strategy, which is the fake out breakout strategy. The fake out breakout strategy is something that people use often, but I have specific rules at specific times of the day and also a specific risk management model, which we're going to go through in this video. So let's go. Okay guys, so jumping into the charts, you're going to need three things for this strategy. Okay, the first thing is this right here. This is an indicator made by Asia Range Nick 948. Now there's plenty of Asia Range indicators or whatever on the list. This is just the one I prefer. Okay, and depending on your broker and your time zone, you'll have to adjust. But basically, this runs from 10 p.m. To 6:30 a.m. And that is the Asia range, or at least the range that we are going to be using as reference for this strategy. The second thing you're going to need is a simple straight white line. Okay, in fact, you're going to need two, one at the top and one at the bottom. Okay, the high of the range and the low of the range. And the third thing you're going to need is price action, and that is it. Price action movement and how the candles react. Okay, so this is a very simple strategy. No other indicators, no oscillators, Bollinger Bands, anything like that. It's pure price action. It is set for a certain time of the day. We're going to get into it right now. Okay guys, and I've just added this. This is an ICT midnight marker. Basically, as it says in the name, shows me where midnight is for the UK, and then I can see the period of the day, and also for back testing, which we're going to do shortly to show you some examples of the strategy. You can go back and easily see the days. Okay. Now for this strategy, you're going to have two types of entries. You're going to have a fake out or a breakout. There is a third type, but I'm going to go through that probably in a second video. So what we're going to be looking for is the fake out and breakout and the reasons and rules that we're going to take a trade. So what we're going to do now is we're going to go back in time. We're going to go back in time, a random time. We'll choose a date, and then we're going to run through the strategy and see if we can find some setups in a simulation manner, running through on the replay feature on TradingView. Okay, so we're going to go up to here. This is where these lines come into handy, so we can use some reference to where midnight is, and we're going to go to somewhere in May. Let's go to the Monday the 8th of May. It's the start of a new week. That looks good. So we'll go down to here, and we're going to go to the 6:30, 5:30, whatever, round in the morning. Now what I normally do is I wake up about 6 o'clock, 6:30 in the UK, and then I wait for the 6:30 candle to get printed, and then wait to see what happens after that. So currently we're at 5:30, 5 o'clock, so we've got three more candles, one more. There we go. So we've had our high and our low printed, all right, which is here. And what I do is I draw the lines on the closures of the 30-minute candles. The 30-minute time frame is my desired time frame. It does work on other time frames. I can take setups on the 1 hour, 2 hour, 4 hour, 5 minute, 15 minute, but the 30-minute is the nicest one that I've found. So moving forward, we're just to see what the price does, and we'll see if we can get a setup. So price is pushing up. Oh, having reaction off there. Another push up. Okay, so we got a closure outside the zone here. So what we're going to look for now is for the next candle to show us what it wants to do. Now it could just suddenly come down here and close back inside the zone, in which case that's a fake out trade or setup potentially, or it could maybe flip bearish in an ideal world and then break above the high. What we do is as soon as the candle breaks above the high after a breakout, then that is a entry for us. Okay, we don't have to wait for the next candle to close. We've had our closure outside the zone, so we'll wait for that next candle to flip up bullish. So let's see what happens. If we do close it, now obviously we're on simulation mode, the candle's going to print immediately, but in real time you would wait to see what the candle does, and as soon as that candle breaks above the high, we would take the trade. So if that does happen in this case, we'll say that we were waiting for that and we would enter the trade. Okay, so let's see what it does. It could alternatively just come back down here and close there. Let's see. Wow, okay, so we had that big push up. Alright, so then what we would do, as soon as we had a little flip bearish there, you can see that little wick, broke above the high, what we do is get our stop loss below the previous candle low, okay, and then we're going to go for a 1-to-1. Now we're not actually going to go for a 1-to-1 here, but this is where we find our target. Okay, now you can see that this trade, amazingly, awesome, made our first TP. But what we do then is we go down, once we get that entry, we go down to the 5-minute, and we find the 5-minute candle which broke the high. okay, this is the 25-minute candle, so the 30-minute candle is the one that did the breaking. So we literally can pop our stop loss below there. Now you can either put it below there or below the previous candle, which before the break, depending on how small the stop is and how you feel about it. A lot of the time though, you're going to get a great risk to reward with the 5-minute, and once volume comes in, it's usually good. Now there is a chance that you may lose a few trades because the stop is too tight, but overall, as hopefully you know, trading is in a long run game, so it's not about just getting every trade right. It's about, you know, with a 3.45% risk to reward, you only need a 30% hit rate for a 1 to 3. All right, so yeah, and this hits more than 30% from the testing. And if you're new to the channel, go check out all the videos on there. I use this strategy to do my challenges, to trade normally, so you can go check that out. We also have live streams and whatever. So you can see here that this would have been a winning trade. We got 3.45%, 3.45 risk to reward and a 20 pip goal there. So it's super simple. All right, so price is pushed up. We could then, in this situation, if you wanted, you could take 80% or 50% or whatever you want to do for your TP, and then you can leave a runner, which I normally do. And at this point, after about 60% of the way up, I would bring my stop loss to break even. So it's a risk-free trade, usually over about the 50% mark. And there we go. So that's a really nice first trade. So we'll see what the runner would have done. Okay, the runner would have come straight down to break even, which is fine. Now, also in this situation, we could see if price closes back into the zone, at which case, if it does close back into the zone, it's likely that we're going to want to fill the zone. Okay, then that doesn't always happen. We could obviously get a retest of the high, and then price pushes up, at which case there wouldn't be a trade for me. I'd only be looking for a trade now on here if we close back inside the zone. Now, just before we go into this, this would be a fake out, but it's a very long fake out. As you can see, we've had our push up and coming back down. I prefer the fake outs when literally from this candle, the next candle will close back straight inside the zone. But if we get a entry here, we will take it. Okay, let's see what price does. Okay, having rejection. Okay, so we close back inside the zone there. All right, so if the next candle flips up bullish and breaks out the low, then I'll take a trade, okay? So the trade will look something like this. Stop loss is going to go above the high here to get our 1-to-1, and we're going to zoom down there to find out. So obviously right now we can't have our risk to reward for the 5-minute because we don't know what's going to happen, but I've just drawn this in so we have our target. Okay, so that's nice. So we've had our flip up bullish, okay? Obviously, price didn't want to go back outside the zone because we've now flipped bearish, which is a good sign, breaking out the low, triggering us into the trade. Now, we can go to the 5-minute chart now. That's the 15-minute. See what candles we got. Now, we've got this candle here. Now, let's say in this situation, we can have it just about here, okay? And this is going to give us a 3.25 risk to reward ratio if all goes well. So let's go forward and see what price does. There we go. Look at that. Beautiful. So simple stuff. We had a closure back inside the zone. We waited for the next candle to break the low. We then waited for the next candle to, once it printed, we found our stop. Okay, we could have had our stop a little bit tighter. Sometimes I don't like to have it right above the 5-minute. Give it a little bit of breathing room. And that thing melted down to fill the zone. And let's see what a runner would have done. Okay, so this would have been our first TP. Could have taken 80% of the profit, or you can close it out completely here. Just make it as one trade. You know, you can take TPs wherever you like, really, but this is my strategy. Break even hasn't been hit yet. Break even got hit. Basically, yeah, I don't know what would have done here. Maybe taken some profit as we start to push back up. Or put my profit goal above this high, the break even above this high to lock in some profits. But there we go. It's a super simple situation there. We had two good trades, a breakout here, pushed up, and then we came back inside the zone, closed there, and then got our entry and melted down. So that would have been an amazing day with 20 pips and 50 pips in a day. Okay, you can be done and put the computer away. So that's super simple. We're going to find some other examples, and I'm going to go through a couple of tips that will also give you things to keep an eye on while we're trading the strategy. So we come onto oil now, and we're going to go onto, again, a random day and see if we can find some opportunities. So let's go to here. This is Monday the 12th of June. Oh, didn't mean to put that line there. Okay. Now let's have a look what we get. Now we're on the 1 hour chart here. I meant to put it on the 30-minute. Let's just look at yesterday. Yesterday definitely gave us an opportunity Did it? Yes, it did. Now, just quickly, this is a good example for you on oil. You can see we had the low here. We will go for the live one in a minute as well. We're going to have the high here. Now, just a quick tip. If you get a closure like this, that counts. Okay, it doesn't just because it's a small closure, it doesn't mean it can't count. Okay, and as you can see, we've had price push up. So really, what we've had is a nice price action. We've had obvious rejection from the lows. Okay, it's tried to push out multiple times, never happened. We then pushed up, tried again, flipped strong bull. Strong bullish and closed outside the zone. Now make sure you draw these accurately onto the tops of your charts here, because you may miss something like this if it's not quite accurate. Now obviously in this situation we'd then be waiting to see what the next candle does, and as you can see, obviously we've had a push up after a breakout, after a flip down bearish, we've then flipped bullish, then breaking the candle's high. And if we go for our 1-to-1, which is right about there, okay, then we go down to the lower time frame, we find the candle which did the breaking. Oh, this is going to be a little far away because where we are, which is this one here, this white one here. Okay, this is the 8:30 candle which broke above there, so our stop loss can go below there for a nice 2.27 risk to reward. Now after a bit of a push up and then a bit of a mess around, we have come up to our full TP there. So that's pretty good. In that situation, maybe we would have got stopped out for break even, or because of how it looks on the 30-minute, that would have been a beautiful trade if you'd stuck in that, which is great. But let's go down to this area here, and I'll show you that. So we've got our high here, and we've still got an hour, so 2 candles printed there. So that's our low. Okay, now this is interesting because we've got a void in price there. So we'll see what we get. Damn it. I didn't mean to click it that quickly. But we'll have a look at this anyway. So obviously we had a break outside the zone. Price pushed down, it came back up, retested, and then eventually broke out the low. So we were going to wait for price to break out the low of this candle here. We go above the previous candle high, which is just there, for our entry. Okay, and we go for our 1-to-1, which is just going to be there. Then we go down to the lower time frame to find the candle which did the breaking, which is gonna be this one here, this big one there. Okay, and then you can see that price had melted down. Now at this point, when we get really close to first TP, sometimes I just take the profit, because sometimes you just got to take the bag, right? But let's see if we did get to our first TP. We did. We melted down, and that is wonderful. So apart from me going too quickly with the itchy trigger finger there, you can see that that trade was beautiful, pushing down, and we got to our first TP for a nice 734 pips on oil. Oil is really nice. It does work out very well. And at the end of the day, as I say, this is always going to happen, right? This Asia range is always going to be printed because it is just what happens. So we can always look for opportunities outside of that range. Now, it's called like the Asia breakout range. People, breakout strategy, people have this and done it for a long time. But this is just my specific way of doing it, using price action instead of sometimes people use liquidity grabs and all sorts of stuff like that, which you can do, but this is just a very simple price action strategy which I've noticed and implemented. And then with this 5-minute risk management setting, where we're going to bring our stop below a 5-minute chart, if you're risking 1% here, you've got a potential to gain 2.4%, and the same over here. If you risk 1% with this 5-minute candle here, then you're looking at another 2.7% rise there. Okay, so it's super simple strategy. At the end of the day, you've got the high, you've got the low. You're going to wait for a candle to break outside, which it's going to do at some point, and then you just need to find a signal like a break of the candle low to trigger that price is going to continue. Now, going on to little tips and tricks, in the next clip we'll get into a few things you need to watch out for. Okay, so we're just looking at this. This is a few days earlier. I've just found some good examples of 3 situations which we can have. So we've got the high, we've got the low here. Now, in this situation, we do have a potential sell trade. Now, you can see this looks quite nice, right? You had the breakout of the low. We then had, we would have taken our entry here, stop above here to look for our 1-to-1. Now, you can see that we didn't quite make it there. But if we go down to the lower time frames, we're going to go find that candle which did the breaking, which is in fact it's this one here. So let's say we had our stop just above this high here. So, okay, so we had the retest, we had our stop above here. We're only risking 111 pips. Now, depending on whether you risk by percent or you risk by or you trade by lot size. I trade by risk, so this would be a 1% risk for me. But you know, if you're trading just stuck lot sizes, and this is only 111 pips for a potential 337 or 1 to 3 risk to reward. So this would be a losing trade, but obviously with this risk management, you're minimizing that risk, okay, for a potential larger gain, okay. So we can say that we lost a trade there in the morning, but it's not over yet, okay? Something still has to happen. And if price is not wanting to come out here and clearly showing bullish movement into the zone, closes inside, then we've got a really nice opportunity to get a buy and make back that loss, right? So price then comes back into the zone, closes, breaks the high. We go for our stop loss below the low there for our 1-to-1, which is right there, and as you can see, obviously we made that work. But if we go down to lower time frame, find the candle did the breaking, which is this one. This is a really nice situation. Okay, we've obviously got a clear candle which did the breaking of the previous candle. Okay, this is the new 30-minute, 5-minute, 30. This is the new candle at the half an hour time of the 5-minute, if that makes sense. Oh my god. Stop below the low, and then obviously you've got a 2.2 risk to reward ratio, and that thing just flew up. Now there's a third situation here. Now this is the one I'm going to make a separate video on, because of the time of, well, just because of the setup itself, it deserves its own video. So this is what I call a price action setup, okay? And this is where we've got a bullish candle. Okay, we then had a blue candle, which or a bearish candle, which closed outside of the zone, tried to come inside but couldn't quite do it. And then the next candle respects the previous candle's low, doesn't break it in other words, and then pushes up, breaking out the high. Now in this situation, our trade would look a little something like this. Stop loss is below the zone. In some cases you could have your stop loss below the previous candle's low, but I tend to like to have it just below here because I trade in percent. You know, risking 1%, no matter how big the trade is, then you know, a smaller move is better because it means I'm not having to wait for an absolutely massive move to get what I want. Okay, so as you can see here, obviously this played out beautifully. We can go down to the lower time frames, find the candle which did the breaking, which is actually this one here, the spiked candle here. Okay, our stop loss could go just below these equal lows here. As you can see, a nice 1.66 situation here. Obviously if we had a runner, that runner has absolutely flown, and then the same in this case as well. And we've got a really nice looking trade there. So that's basically the three setups or three scenarios that can happen. Obviously this is a losing trade, but with that risk to reward ratio, we're not too bothered because we've just made that back with 2 opportunities in the same day. And that's what you've got to look for, right? You can see how price plays around this zone, and you can find these levels every single morning. They're always there, and then you can go into that and look for trade opportunities. Another thing which I noticed here as well is the daily candle. Now the daily candle is important because obviously the daily candle has all of the volume for the day, or all of the information for the day, should I say. And in this situation you can see that the low is just here, okay, and it's pushed down and entered back into the zone and flipped bullish at that point, which indicates after, if price is pushed down already in the day and then price is then flipped above bullish, which actually got that closure back inside the zone, then that's an indication that price wants to continue up for the day. Because if you've already pushed down and hasn't continued, then you know, it's likely that we're going to flip bullish and continue that way, or at least for a while, because if we're on the lower time frames we can still catch that movement, right? So they're just 3 little tricks and tips there. And with the daily, also another thing to look at is to the left. Now always in trading, if you're new to trading, you should always look to the left. That's where we find our information, because that is history of the charts, okay? Hence like this, we're looking to the left to find the highs and lows. You want to just look for areas of interest. Now that could either be a target, aka a supply zone, which is here, which we have visited, and a fair value gap or imbalance here, or resistance, which may stop the trade from going to where you want it to go. Okay, obviously if you have resistance ahead, a strong resistance, then it's likely that price may be just retouching resistance to come back down. And I'll see if I can find an example of that for you right now, but it's just one thing that you need to be aware of. So let's have a look. Okay, so I've just found an example of the resistance potentially causing some issues for the trade. Okay, now here you've got the highs and you've got the lows, but we've got this resistance to the left here. All right, and price is down below there. Now this is obviously not the strongest resistance, sorry, not the strongest support, but it could become a relatively strong resistance, even just if it's just for the short term, which you can see we did get here. So what we had was the closure outside the zone here. This candle did break the high, so we could potentially take that as a trade, or you may have taken this trade, okay? And in that point, obviously, this area has then created a halt in price, trying to push price down before eventually over in the next part of the day, after retesting that resistance, coming back into the zone, has pushed up. And what you can see here is actually we've got that price action set up that I spoke about earlier in that last example, where we've got a nice bullish candle breaking outside the zone. We've got that blue candle which tried to come into the zone but couldn't quite do it. The next one respected the low, and then we broke up and finally broke out of this minor resistance here, and then prices continued up to the upside, and that would have been a really nice trade. So just be wary of what's happening to the left, either good or bad. Now, good being that we've got fair value gaps and things up ahead like we had in an earlier example. Or you've got resistance which is going to halt price and potentially look for price to turn around. Keep an eye out for that, and we'll just close off the video in the next clip. Okay guys, so just while I was editing this video, I thought I'd drop this in. This is a backtesting session that we did live on the YouTube. You can go check out and watch the video back. But basically this is on GJ, and we had 20 trades here. Okay, we had long and short positions, breakout, fake out, and the price action setups. We had our stop loss amounts, TP1s, and our total pips, which is our runners. We didn't count the runners in our final result, so that was just to see if we got a runner and how far it would have gone after hitting our first TP. And also our risk to reward ratios, which you can see are pretty good, about an average of above 3 or so for most of the trades here. Overall, we managed to have 10 wins, 8 losses, and 2 break-evens, and that gave us a result of a loss of 8%, but then also a gain of 31.58%, which overall, taking away from that loss, was 23.58% on the account after 20 trades over about 21 days, I think it was. So just thought I'd throw this in here just so you can see it, and yeah, let's get back to past me. And there you have it guys, my simple fake out and breakout strategy for Asia highs and lows. I hope you enjoyed that and found it interesting. Check out the other videos on the channel, live trades that I use this strategy for. Also, come and join our live streams. We backtest this often, and if you look at some of the previous live streams, we've backtested this with results on there, so go check them out. But if you haven't already, please like and subscribe. Appreciate you guys for all the support. Go check out the clothing, the link is in the description. Come and join the Discord. We've got loads of you guys over there, and the family's growing, which is awesome, and we've got to have lots of fun there. So yeah, appreciate you guys being here. Thank you very much, and I'll see you guys in the next one. Peace.